Welcome to the Matt Money Show. I'm your host, Matt Cervoni, a CPA who likes to talk, and my goal is to provide clear steps to take control of your business and personal finance. If you have a topic or a question you'd like addressed on the show, just go to @TheMattMoneyShow on Instagram, leave a comment or send us a DM, and we'll make sure to feature it on a future episode. We've also added Linktree to the Instagram. If you're looking for a discount on Monarch Money, which is a personal budgeting app, or if you do have a business where you manage clients, we also have a discount code for Client Hub. And you can use that code, get set up with them, and save a good bit on your first few months. We also have links to everywhere the podcast can be found. And I would encourage some of you to, especially for future episodes, I do plan to do a couple more on the business side, but that might be more technical. And I'll walk you guys through a few templates and things. So you'll want to watch it, check it out on YouTube. But of course, anywhere you listen to podcasts, that's great too. So today's episode is called Business Flow, and we're going to be focusing on the business side of what I call Matt's Money System. So who is this for? Because it is not for every business. It's specifically for a business that operates as an LLC or an S Corp who has one owner and does under $1 million in annual revenue. So if that's you, which there are a lot of businesses out there that fall under that description, this is to help you take control of your profitability, understand taxes a little bit better, and have a flow of money that actually works to allow you to be profitable and not just have external factors determine whether or not your business is successful. I think in our culture, one of the things that I find interesting, and this is after years of working as a CPA with a lot of businesses that fall into the description that I mentioned, is people hire experts just way too early. We want to get the financial advisor, get the CPA, the lawyer, the consultant of whatever name or kind that it is. And we think that by doing that, they will, through their expertise or their experience, they will make our business something substantial, something we're proud of. And I'll be honest, when you're at the smaller scales, you really are the one that's going to make or break your business. Like until you hit that first $1 million, a lot of it is going to be you. And I think, unfortunately, a lot of entrepreneurs, promising entrepreneurs, end up just kind of blaming their business's lack of success, lack of profitability on these so-called experts, when reality is that they're engaging these people too early. There's going to be plenty of time to work on the business when you actually have a business. In the early days, you're going to have to get your hands dirty. You're going to have to create systems that work, and you're going to be the one that's responsible for making a business profitable. So I'm not here to say that working on the business is, not productive. It definitely is. I'm not here to say that experts are bad. The experts can make a huge difference. But typically, an expert is going to come in once you've already got something substantial, and that's when they can add real value. Before then, honestly, people that are selling to small, like super small businesses, financial advisors that go after people with low incomes or low net worth, they're just hungry for sales. They got to put food on the table. They're trying to close deals. I don't really believe that they're out to help you. So start small. Don't worry about the experts. Focus on low cost or free online tools, which we're actually going to provide some templates at some point. Educate yourself and keep working. Once you've gotten past that $1 million point and you have a profitable business, that is when you're going to find the good experts, because the good experts are going to want to work with you once you cross that threshold. And it won't be people that are just constantly, in your inbox, hey, want to do lunch? When can we meet up for coffee? They're just trying to sell you on stuff. These are people that are probably saying, actually, my business book is full. But now that you've reached this threshold, I can actually put you into our system and add a lot of value. So how does this work, and what is the influence of business flow within the Matt Money system? And what it is a big conglomeration of just different books that I've found are very impactful for business owners. I think when applied together, along with a little bit of my own spin, It can be a real supercharger for someone who's just getting started with their business, or maybe someone who's been operating a business for a while, but they're not seeing those profits or they're not seeing the results that they want. So first is Profit First by Mike Michalowicz. That is actually in my studio. Can we see this on the video? Oh, cool. Okay, Profit First right there. Also below that is Traction by Gino Wickman. And Traction is a really great book. So Profit First is great for the flow of money, but Traction is a great understanding of like how to run your business and the rhythm that you should follow, the types of people that you should engage, whether it be clients, customers, as well as employees. So Traction, another great book, great conceptual framework for running your business successfully. The Simple Path to Wealth by J.L. Collins. This one mostly focuses on keeping your investments simple but effective. I won't go into too many details here, but a lot of us, especially those that get most of our financial advice on social media, we are all over the place on investing. One day we're in crypto, the next day we're in real estate, and never do we spend enough time in any one asset class to realize what the most effective place for our money is. I'm even guilty of this. I've done a lot of real estate investing over the last few years, and I'm excited to share with you guys at some point comparing all the hard work that I've put into a live-in flip. And I've talked about this in a prior episode, but comparing that to just investing in an index fund that follows the S&P 500. So Simple Path to Wealth, insanely good book for anyone, even non-business owners. And the last one is Financial Peace by Dave Ramsey. A lot of timeless principles. And while Dave Ramsey, I do have some disagreements with him, I think overall the message is very sound and clear that you are ultimately responsible for staying out of debt, for building your wealth. And I think he would agree that you are ultimately responsible for your business being profitable. So where do we start with this? So all you need in order to have the flow of money that I think is optimal for your business and control your profitability is you're going to have 2 checking accounts for your business. And then you're going to go online and you're going to find a high yield savings account. A couple examples would be like Wealthfront, Ally Bank. I think Vanguard offers one as well. But go online, find one of those. And as long as it will allow you to open the account, but also name some buckets. So one bucket you'll need is going to be called profit. The next is going to be called tax savings. And the last one is going to be called prepaid expenses. So it's essentially one account, but it allows you to have envelopes or buckets that you can set money aside. And as the quarter or year goes on, funds will build up in those accounts, and then they'll be deployed when the right time comes about. So how do we do this? Well, all of the money that comes into our firm or into our business needs to hit the revenue account first. So if you sell to customers, that goes into the revenue account. If you have clients on a monthly recurring basis, that goes into the revenue account. If you're a real estate investor, you close on a house, that goes into the revenue account. Out of that, we are going to determine a profit percentage. We're going to use 15% for taxes to be safe. That's a good percentage because while your tax rate is probably not 15%, you are going to have deductions and things. And this is a number coming out of your revenue rather than like your total profit. So we're going to use 15% for tax as like a rule. And then the rest is going to go to our operations account. So the high yield savings will get profit and tax funding out of the revenue, and then we'll sweep everything else into the operations, which is just a regular checking account. We're going to do this twice a month, so that's it. In order to follow this process, you're looking at 2 mornings at the coffee shop, 20 minutes each, maybe less if you get really good at this, and you just look at what's in the revenue account. You get your phone calculator out or whatever you want to use, allocate the money to your high yield savings account for profit, for tax, sweep the rest into the operations, and we're good to go. Now, why do we do the 10th and the 25th? So I think for most small businesses, the most optimal payroll schedule is going to be on the 15th and the last day of the month. If you operate bi-weekly, this still works. You just may need to change your timeline a little bit so that you're beating your payroll when you move money out of revenue. But if we move money on the 10th into operations, then we're ready for payroll on the 15th. Same thing if we do it on the 25th, we're ready for payroll on that last day of the month. Also out of operations, we can do two other things. Number one, we can pay off our business credit card. And yes, I do recommend having a business credit card. I know people that, when you're a single owner for your business, those credit card points or the cash back you get on it, from a tax perspective, is essentially treated as like a contribution to your business out of your own money. Or if you use the points, it doesn't hurt you for taxes. It's not income to your business or anything like that. So I think there's a lot of awesome things you can do by having a business credit card and just responsibly paying it off when you do your meeting on the 25th each month. So you'll pay that off out of operations as well. Yeah, and I've seen business owners do like they'll pay for their company's healthcare just out of credit card points if they have enough. And that's it's essentially free healthcare because you're paying for so much in advertising or software, whatever it is. And then the cash back for that is covering the healthcare piece. That's amazing. Or if you want to use it for your personal life, the business should serve you ultimately, then that is acceptable as well. So we're going to be working on a few templates to help with the flow of this money. But the last thing you can do out of your operations account this is the one that I think gets business owners the most, is save for prepaid expenses. You might have a piece of software that you pay for once a year. You might have other obligations that come up randomly throughout the year, seasonal workers. I think software is probably the most common example, but maybe you have to replace fixed assets. If you have to buy new things for your business, prepaid expenses is a great way to take whatever the time period is that you'll need to fund. So let's say it's an annual renewal for Trainual, which is an awesome app that I've used, and it helps you train new employees on your standard business processes. Great. They bill you once a year, and if you don't have Map Money System in the business flow, when that bill comes in, all of a sudden you owe Trainual $3,000. That probably hijacks your entire cash flow for the month. You might be operating at a loss now, and it's very disruptive. So instead, if you know that's a once a year cost, what we can do is at the end of the month, just like we pay off our credit card, out of the operations account, we can move 1/12 of the Trainual bill into the prepaid expenses in the high yield savings account. This is awesome because now we are not only prepared for that bill, because we'll have 12 small deposits throughout the year, and then we just pay off the Trainual, but we're also going to be making interest on the money we save all year long. So we have some passive income coming in, and we're also more prepared for big bills. This works the same with like your profit and your tax savings. So those are going to be on a little bit shorter timeline, and you can do this with prepaid expenses as well. Let's say you pay for something quarterly, use prepaid expenses for that. You just do 1/3 of the cost, fund it every month, and then at the end of the quarter, make the payment. For profit, what we're going to do is we are going to distribute that money to you as the owner at the end of the quarter. Now, some people will argue that we should leave some money in the profit account and maybe only distribute about 50%. And I'm inclined to say that you know your business better than anyone. That's a decision that's up to you. I do think leaving some money in the early days is very smart. If you're still building the business, there's a lot that could change in a month or a quarter. And so having some reserves, almost like an emergency fund in the profit account, can be really useful. But ultimately, that profit is really not to bail out the business. It's not even the business's money at that point. It is for the owner. And you as the entrepreneur, we need to get out of the mindset of, I'll make money eventually, and I just got to keep this train on the track and keep sacrificing my personal life, keep sacrificing any sort of personal gain for the business to work. And we need to more so look through the lens of this business is set up to serve you. Whether you're working 80 hours a week in the business or you're completely passive, the business exists. You created it to serve you. And so the profit should be going to your personal bank account. And then the last thing is taxes. If you're a responsible business owner, you are to make 4 quarterly estimated payments to the IRS and your state government if you have state tax throughout the year. And the taxes savings, it makes that really easy. You can go ahead and just allocate an amount for federal and an amount for state. If you work with a CPA, they will tell you what those numbers are. If you use TurboTax, you can actually get safe harbor tax estimates through TurboTax. Can also just use general rates. So if you're saving 15% of your revenue into the tax savings, you can go to NerdWallet, look at about how much income you expect to make this year, use that percentage for your federal, and then use your state percentage, which those are usually much easier to find. Quick Google search, what's the tax rate in Ohio? What's the tax rate in Kentucky? And the little Gemini AI will probably tell you that. And so you can take what you expect to earn this year times that percentage, and then just make 4 quarterly payments in order to stay on top of it. I'd say the profit, the tax, and the prepaid expenses, these are the things that I see most business owners struggling with. They're either not making estimated payments for tax, they're not making any profit for themselves, and so they're burning out of their business, like hating it more every day, or they're doing pretty well and then they're having these once a year expenses or once every biannually or quarterly expenses that are disrupting what they thought was a profitable business. And then they're going back in the other way. So if you can open this high yield savings account and just make 3 envelopes or 3 buckets and have a system for this, it's twice a month. I think you'll see results right off the bat. And like I said, we are going to create some templates to help you stay on track with these types of things. And my only other note for the episode is, I think also with those quarterly distributions, so we're going to distribute profits. We're going to make our quarterly estimated tax payment. The last thing we should do is we should have what Gino Wickman calls in Traction a pulse meeting. And even if you have no employees, you're DIY, this is all you, this business, still have a pulse meeting. And all you're going to do is you're going to set a 5 to 10 year target for your ultimate goal, 5 to 10 years. From there, you're going to work backwards. So you're going to go, what do I need to do this year in order to achieve that 5-year, 10-year target? Okay. Then what do I need to do this upcoming quarter, in order to achieve my annual goal? So we're starting with the big goal, the one we hope to get to in 5 to 10 years. And we're working all the way down to the current quarter. And what actions can we take now that contribute to that 1-year goal, which contributes to the 5-year, 10-year ultimate plan? And if we do that and we meet our rock for the quarter, I think you should reward yourself. So I think out of that profit amount that's distributed to you, you should do something for yourself that's exciting. That can be investing. I do that as well. Sometimes, the majority of that quarterly distribution is just being plowed back into an investment. VOO, S&P 500 index fund is the best one in my opinion. But it could be used for real estate investing, could be used for whatever you like. But I would also encourage you to consider travel, to consider getting something for yourself that's meaningful. We want to keep you motivated and continue to improve your business and grow it, not feel like your business just deprives you of any happiness and that there's this fake ultimate one day I'll be profitable and I'll have all this money. If you can't do it now, it's not coming. You've got to start doing it now. Last thing I want to say is, if you are finding yourself with way too much money at the end of the month, which is probably a low percentage of you, but let's just address this. My profit is funded. My taxes are funded. My prepaid expenses are funded. I still have a lot of money left over at the end of the month. In that case, my recommendation to all of my clients that I work with is increase the profit percentage. More should be going to you if that's the case. Or we need to look into expansion. If we want to do more, maybe we reinvest that money in assets, in advertising, in employees. There's nothing wrong with that if that is your circumstance. What's more likely is you don't have enough money at the end of the month. And if that is the case, then our profit percentage needs to be starting very small. And my template will help you with this. We can look at where you're at today. Maybe that profit percentage is going to be 1% or 0.5%, but we're still going to make the transfer, still going to move the money to the high yield savings. Even if it's $2, we're moving it. And then over time, as we set up the process, we are going to continue down this road of funding our high yield savings a little bit more each quarter, making changes, setting rocks so that way we can become more profitable, whether that's through expense reduction, changing our process, or more income. And over time, we will see that that profit percentage can rise to what our desired percentage would be. And my last note on this is if you operate as an LLC, there is a good chance that you don't run payroll per se. You might just be transferring money to your personal bank account. I want you to know that's completely okay. However, I would spend the time to figure out what amount of those transfers is income for your services and what amount is profit. And I'd like you to separate those. So twice a month as an LLC owner, you pay yourself whatever your services are worth, and you still set that profit percentage and move it to the high yield savings. It's a really good habit to get into. As a CPA, eventually an S Corp is going to be amazing for your structure as you become more profitable. But in an S Corp, you're going to be required to have salary and profit. And you're going to have to distinguish between the two of those. So setting that habit now is going to make that transition to S Corp life a lot easier. And so my action item for this week is, if you would like the Matt Money System Business Flow templates, just send us a DM with your email and we'll get those over to you. And what we're really looking for here is just feedback, ease of use. But they are ultimately intended for you to listen to this episode, apply your numbers to those templates, and hopefully start having a profitable business. So that's it for this week, and looking forward to next week when we talk about personal flow.